Hello and welcome. You're watching Business Today. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D street. But we'll start off with the IPO that everybody has been talking about for so long, and now it's finally opened for subscription. I'm talking about NTPC Green IPO that's open for subscription today, and the issue, which is an entirely a fresh issue of 10,000 crore rupees. This is the third largest IPO that you've seen for this year. Also, of course, this will be open up until November of 22nd, so you do have time to subscribe to this. It's already raised about 3960 odd crore rupees from the anchor investors as well. Already on day one so far, we've seen that the retail portion has already got sales through. Overall subscription stands at about 27% as well. As you all know, NTPC Green is a leading player of India's renewable energy sector. It's backed by NTPC. It contributes nearly 17% of India's total installed capacity and 24% of the total power generation of India as well. Now, to discuss with us some more key details about the IPO, the vision going forward, and the journey which has been so far, we are now going to be joined by the top management of the company to share with us those key details. Let's welcome on board Mr. Gurdeep Singh. He's the CMD of NTPC Green Energy, and we also have Mr. Jayakumar Srinivasan, Director of Finance of NTPC Green Energy. Warm welcome to both of you, and thank you so much for taking the time out. Congratulations for setting and kick-starting this D Street journey. It's already started off on a smooth note for you. Let me kickstart by understanding with you, Mr. Singh. First, tell us about your journey so far for NTPC Green. Of course, NTPC is a marquee power player that all the investors of D Street are used to of tracking in terms of the stock prices for decades now. But NTPC Green is a newer baby. Tell us, how does one really differentiate between the two companies? Now even NTPC shareholders who were subscribed to it will also get shares or probably get higher chances of allocation in this new IPO as well. So even they will be excited to know what else beyond NTPC will NTPC Green offer to them.
Thank you. So, Jasa, as you just mentioned about NTPC, that everybody, and you think of the power and the NTPC's name instantly comes to everybody's mind.
Absolutely.
And similarly, going forward, think of the green power and the NTPC Green journey will come to the everybody's mind. I think that's what our endeavor is. NTPC started the solar journey and the kind of signing the power purchase agreement for the renewable energy way back 10 years back. And over the period of time, we have developed a lot of core competency in our team. This company, NTPC Green Energy, was formed in 2022. And there were assets which were transferred to NTPC Green. And in 2022, this capacity was hardly around 1450 megawatt. Today, we are having 3300 megawatt. The lot of work is going on in the different projects, totaling to around 11,000 to 16,000 megawatt. And by end of this financial year, that means the March 25, we will be having the capacity of 6,000 megawatt. By next March, this will be 11,000 megawatt, and by March 27, this will go up to 19,000 megawatt.
Okay.
And in addition to the solar and wind, we have also started working on the storage solution. So we have already called the bid for the 1500 megawatt hour of the battery storage, and we are also working on the next important pillar, which is going to be the future, which is called the green molecule. So we are working in all direction, and I'm sure that NTPC Green will emerge much on the similar lines what NTPC has done. As you rightly said, with the 17% we supply 25% of the power supply. Similarly, NTPC Green Energy with its kind of parental linkage will be far better than any other company in the country.
Okay, let's also get into the conversation, Mr. Srinivasan, right there. Do tell us how are you going to be using the proceeds from the offering? It's a 10,000 crore rupee fresh issue. What you've also mentioned in your DRHP is that for the wholly owned subsidiary NTPC Renewable Energy, a sizable portion will be going towards, and some portion will also be allocated for the repayment of debt and then general corporate purposes. Could you break it up for us and tell us out of the 10,000 crore rupees which goes where?
Yeah, out of the 10,000 crores which we would be raising through this proceeds for investment into the JVs and subsidiaries, the subsidiary companies that the mainstay would be the NTPC Renewable Energy Limited, where the chunk of the capital expenditure capacity addition is going to happen. There we'll be investing for predominantly for capital expenditure purpose, but for some time in the initial period, we will be retiring some of the debts which is there around close to 7,000, 17,000 crores is there. Part of that will be retiring, and then subsequently as the capacity picks up, we will be we'll be raising more debt for fueling the capital expenditure.
Okay, so sir, could you tell us, like from that 17,000 crores, after you repay the debt, how much will still remain on the books?
Close to 7 to 8,000 would still remain in the books.
Okay, and debt to equity ratio, what is the expectation right now? It's at 2.2. How are you really looking to scale that down now?
Initially it will be scaled down, but future projects all will be implementing with a debt equity ratio of 80:20, then that would
Okay.
average out subsequently.
Okay. Okay, got that. And for the renewable energy business, how much will be used? Can we say around 7,000 crore rupees will be used?
I think the entire proceeds will broadly go towards renewable
Okay.
energy only. It will be for
Okay.
capacity additions.
Okay, got that. Okay, let's also get in now, Mr. Singh, into the conversation. Now, you did talk to us about the expansion plans that you have, that by FY27 we could be expecting somewhere around 19,000 megawatts of capacity. Do tell us, how much of the current proceeds will be sufficient? How long will they be sufficient for you to putting in into these expandings and your capacity expansion? By how many years will you be comfortable with this fundraise, and how soon will you then have to return to the street?
See, by March 27, as I just be 19,000 megawatt, which will be commissioned. Along with that, we are also working and investing in the development of the new capacities. So
Okay.
as of now, we have already infused the equity of 7,500 crore, and we have some retail which is there in the company. So with the 10,000 crore, we will be almost comfortable to have almost around 19,000 plus the retained earning as we go along. So we
Okay.
don't have any issue to reach up to the 19,000 megawatt, because for the 19,000, the total investment requirement is about 1 lakh crore. So what we are just planning that we will be having the debt equity ratio of 4 is to 1. So this is only the intermediary kind of step, so that if the funds are available for some time, this will be kind of for retiring in the kind of very short period. But our growth plan are much higher, and we will be requiring this lot of capital. And as you will be knowing that uh, our ability to raise the debt at a very
Yeah.
competitive rate is far better than many others, because our rating is very good. We have the rating as per AAA, and
Nice.
for the international rating, it is as it's capped at our the sovereign rating. So we are in a position to raise the debt at a very competitive rates, and that is going to be one of the differentiator. And
Okay.
our investment is also in the large size projects. So that is the two things
Yes.
put together makes it a much more, I think, a much more valuable company for us.
Right. So, Mr. Singh, could you also help us understand? Right now, you pointed out you are big on solar and on wind, and you are now going to be going forward to the battery storage and then going to be expanding into the green cell as well. Segment wise, what is the contribution that you get from solar and wind right now into your overall top line? Going forward, how is the segment contribution in terms of revenue going to be spread across?
See, as far as this 19,000 megawatt by March 27 is concerned, there will be approximately 3,000 megawatt from the wind and 16,000 from the solar. And going forward, what we envisage is that we will be having almost 90% in the solar and 10% in the wind. But along with the solar, there will be enough potential for having the storage capacity with that. So there will be appreciable kind of investment which will be required, which is at present we have not really given the figures as of now. And And down the line, about 3 to 4 years, we will have to start investing into the green molecule also, which we are developing at present, our hydrogen hub, for which we have already acquired the land, and it's
Yes.
already the work is for the developmental work is going on that.
So, sir,
So there is a huge effort.
this land purchase also is in Rajasthan, since most of your projects right
No,
now
no, no.
are in. Okay.
This green hub, hydrogen hub, is in near to Visakhapatnam,
Okay.
which is place called Pudimadka. So this is 1200 acre, which is a coastal location.
Okay, so
So
this
this
gives
will
you
be
the
helpful for export.
geographical edge also, because right now the concentration was
Absolutely,
there in Rajasthan and now you're going down south also with this expansion. Okay, understood.
absolutely.
Okay, Mr. Srinivasan, could you also help us as far as your margins are concerned? Where are they at currently? What is the outlook there? What is the band on the margins that you could expect, especially with the expansion plans that you have till March of FY27? How do we see margins growing over the next 3 years, sir?
No, we, as far as based on this half-year results which we have just published, I can say that it's a very, very comfortable margin. We have been consistently maintaining a EBITDA close to 90%. And the profit margin is also healthy. We have a 16.2% margin. And with this capacity addition envisaged, which is quite steep from every in the first year, this year we are going to commission around 3 gigawatt, next year 5 gigawatts, and thereafter it will be an average of 7 to 8 gigawatt. So you can expect a commensurate growth in the revenue and profitability with this kind of a PAT margin. And with the capacity addition, the economy of scale will also set in. And then, and the other thing which CMD was mentioning is we have an edge over the cost of financing.
Yes,
We are also going to raise a significant amount through foreign currency borrowing, which will give us an edge and competitiveness, which will translate into a better bottom line for the future.
Okay. Mr. Singh, could you help us understand as far as your growth projections are concerned? So far, we've actually seen substantial growth both on top line and bottom line on a 3-year CAGR basis. Your PAT on a CAGR growth has been upwards of 90% from FY22 to FY24. Your revenue CAGR growth has been reported upwards of 47%. Will this be sustainable given the kind of expansions that you're going to be doing? And what is a realistic expectation that we can have for FY25? Sir.
See, as was explained, I think this is the EBITDA of around 87 to 90%, and there is no reason that going forward it should be becoming better rather than becoming worse because of the economy of scale. And let me say here that our all investment decisions are only made after the thorough investment decision. So you can assume that similar kind of over the next period and 2030, which is likely to be achieved by 2030 itself, reaching to around 60 gigawatt. So there is going to be a good revenue and good cash flow, and we will be able to grow at a kind of similar trajectory what we are just explaining as of now.
Wonderful. Mr. Srinivasan, how about your relationships with the off-takers and the suppliers? I understand there is a long-standing relationship, upwards of 10 years and even 20-25 years in some cases as well with some of your partners. How does it stand right now? Do you think some of those partnerships are getting over anytime soon? How are you really looking forward to increasing the number of clients that you will be dependent on for your supplies also?
Yes, we have currently at present 17 different off-takers as far as our renewable business is concerned. But as you rightly said, that as a parent, NTPC, we have a long-standing relationship that stretches on for 50 years, for a 5-decade
Okay.
relationship with almost every state. We have a presence in every state except Lakshadweep because there is no connectivity over there. So the relationship is very deep. And as far as the recovery is concerned, it has been quite impeccable, at least for NTPC, given the latest framework of LPS mechanism and the other things, and also the health of the discoms. We don't see any major problem on the recovery sides, and it has been quite robust.
Okay. Also, could you give us a sense on post the IPO, what will be the shareholding pattern? How much will NTPC continue to hold, and what will be the public float?
Post this IPO, NTPC will be holding around 89 to 90%. That is based on whatever is the pricing and the target. And of course, as CMD was explaining, 7,500 of equity is already available. We have 8,000 crore plus of net worth. And with this, we should be able to see through for next 2 to 3 years capacity addition. However, as we ramp up the capacity further, we'll have to come back to the market to raise further equity. That will be doing it in a very calibrated way, depending on the requirement. And anyway, we have to in the next 3 years, we have to come to 25% dilution as per the SEBI guidelines,
Yes.
which will do it sparingly and timing it appropriately.
Okay. I'll come to you, Mr. Singh, for the last couple of questions, and this will be one on the concerns some of the analysts at brokerage houses have brought up, and that is on the aggressive valuations right now, which puts you right ahead of the competition by a few notches. What is the sense that you would want to part to all the investors, prospective shareholders, as well as our viewers as well, when it comes to valuation part? And of course, the other part is on competition. We've already heard so many marquee private players also start to talk about renewable energy in a big fashion. Of course, you are one of those companies which has already been in this space and in this business from a long time, so you have that edge, but with more private players entering, how is the competitive scenario going to be developing?
See, I think let me then address the last thing first.
Okay.
So we are only in the power generation. There are different business houses or the corporates which have been kind of taking up whenever the opportunities are there. So we have been in the power sector and we will remain in this power and energy sector. So that is a clarity what we have, and that is our core competency. So we can say with pride that the team what we are having is having the whole kind of competencies related with the power sector, whether it is design, whether it is engineering, whether it is inspection, construction, operation, you name it, and we have the expertise and we give the consultancy also to the others. So I don't want to say more than that, we are not afraid of any of the competition on this side. Let me just share with you the another kind of testimony on this, that our CUF, which is the capacity utilization factor for our recently commissioned projects, we have been able to achieve 29 to 30% of the CUF, which used to be almost 22-23% and some time back. And on an average, it will be hovering around 25%. And that is possible because of our competency within the team. And as we just mentioned, that we have a good rating and backed by a very strong balance sheet of the parent organization. So there is no reason that we should be really facing a kind of threat from any of the other kind of. But at the same time, I think the country needs a large capacity for that, and there should be a space for everyone. Our plan of the 60 gigawatt, as I said, we should be able to meet by 2030 itself rather than 2032, and thereafter, this is similar kind of growth will maintain. And this will start going towards the, as we just mentioned about the storage, which will be able to supply the, let's say, solar power through the storage system, which is not only battery, but it can be a pump storage also, so that when the sun is not shining, means the off solar hours also we will be able to supply the renewable energy. And going forward, further this green molecules, which is, as we just mentioned, green methanol or kind of going up to the sustainable aviation fuel. Let me hurriedly then tell here also that we have done a couple of experiments with the green hydrogen. That is, one is in the Leh Ladakh, but that in case of Leh Ladakh, we have already running 2 buses fueled by the hydrogen. So which is going to help decarbonization there, but also it will avoid taking the fossil fuel all the way, first import, then refine, and then taking up to the up to the Himalayas. And at our Vindhyachal project, we have commissioned our 10 ton per day green methanol plant, which is capturing the carbon dioxide from the stack and utilizing the hydrogen produced from the renewable energy. You can have the green methanol. So these are already we have started getting the competency into these areas, and our hydrogen hub will be able to provide us excellent opportunities. We are in the discussion with the various players into this who can use, whether it's a marine or whether it's going to be tomorrow on the aviation side.
Okay,
I'm
okay,
seeing enough
wonderful.
opportunities which are going to be there in the space.
Okay, and the valuation part, sir?
On the valuation side, we had been discussing this with the across the stakeholders, and let me share with you that we had a meeting with more than hundreds and a kind of institutes, and what had come out in a kind of the number. In fact, we have given some kind of relaxation to that, so that there is a
Okay.
incentive for the early investors, and they should always cherish and they should be able to participate into this growth area going forward.
Okay, wonderful speaking to both
Thank
of
you.
you. Thank you so much, Mrs. Singh and
Thank you
Mr.
so much.
Srinivasan, for being with us.
Thank you.
And all
Thank
the
you.
very best to you for the IPO as well as for the listing journey. We will see you around the quarterly results every quarter now. Looking forward to having more interactions with both of you. Thank you so much.
Thank you.
Thank you.
All right. So there you have it, viewers. You heard from the top management of NTPC Green. This is perhaps the most comprehensive interview that you would actually get to hear from the top management on what the plans are clearly going forward from here as far as NTPC Green is concerned. All the aspects have been understood, and probably this will help you really decide for yourself whether this is the company that you would want to have on your long-term portfolio. But do speak to your fundamental experts as well on that. Getting back to the markets, 100 points of gain still remain, but you actually see the last 15 minutes, we've actually seen a whole host of profit booking come to shape. We were hovering over 23,700 comfortably for a large part of the day today. But as we began on a slowly and steadily note, just the last half an hour is actually showing us some profits being shaved off just before we head into the truncated holiday as well. That is tomorrow on account of Maharashtra elections and some by polls. So 0.4% of again still remains 23,550. Let's welcome our guest on the show, Mr. Mustafa Nadeem, CEO of Epic Research, is with us on board. Mr. Nadeem, good afternoon, and thank you so much for taking the time out for this discussion. Tell us, how are you assessing the move in the markets right now? It's been painful 5-6 weeks, and after that some bounces are coming back, but we do not know if it is going to be lasting for too long or not. And what exactly should the viewers and investors be really assessing in terms of the markets? What would you say?
Yeah, so as we have seen today's rally, in the morning we have seen a good opening, but in my view, this is not a reversal rally, trend reversal rally, or we are moving towards a bullish zone. It's more of a relief rally because we have seen past 7 sessions where market have been down. So I think it's more of because there are three reasons which I see for today's rally in the market. First is the Asian market supported us because there was bullishness in Asian markets. Nikkei was up because of the rally in chip makers, and other Asian markets were up. The market was overall in oversold zone. So yes, some bounce back has been seen from that oversold region, and also the FII selling has been reduced. I'm not saying it's over, it's reduced. So these three factors resulted in a relief rally. It's more of a relief rally, but we should not consider it as a trend reversal. And again, on the higher side, we can again see market coming down. Like as we saw today, 23650, 23700 are the levels where market is showing resistance, and I think it would we soon see level of again 23200, 300. The market would test this level, and if we go below this level, then more pain can be there in the more pain can be seen in the market. So the traders should be cautious with the current market, and I think for the some time the market would be either sideways or subdued. This because of the reason because the earnings are not supporting. And I see in FY25 first or second quarter we would see the earnings again becoming positive, and that kind of rally we can see. And the also I think the some clarity from the US administration side regarding tariff and all would bring more clarity on how the things pan out for the longer term. So for the short term, I think the market would be subdued or more on a negative side, and all the rallies, the traders and investors should be cautious of these kind of rallies and should not seeing it as a trend reversal.
Okay, got it. So, Mr. Nadeem, we just got off by talking to the top management of NTPC Green. This has been an IPO which was much anticipated for this year, the third largest one, and of course the first one in the renewable energy space of such large 2024. Your own sense on how are you assessing the opportunity for long-term investors? We do know that, right now, because of the concerns around aggressive valuations, the listing gains, and of course the scenario in the markets right now, we should not be expecting very high listing gains. But at the same time, for those who are actually looking at the renewable energy theme as in their portfolio for the long term, maybe 5-10 years down the line, is this a good company to be having in the portfolios at the current price?
Definitely, it's a great stock to have in the portfolio, given the sense the kind of company it is, the kind of performance it has shown in the past, and the expertise which they have in the renewable sector, and the thrust which government is putting on the renewable sector. Definitely, for the long term, it's a must buy. But again, as you rightly pointed out, that the kind of aggressive pricing which has been shown for the stock, like the price range of 102 to 108. Previously the market was expecting anywhere between 32 to 50 rupees pricing, but it has been priced at 102 to 108. So yes, for listing gains, those who are looking, they should not go for it, but for longer term, for a horizon of 5 to 7 years, it's a must go stock, and we might see level of 200 250 for the longer term, because this is the theme to be in the long term. And if you would see the kind of infrastructure which has been created, the policy infrastructure which has been created for the renewable and the energy sector, it is definitely going to be very positive for this stock in the longer term.
Okay, got it. Let's take the next, we'll just talk about the markets and the key pockets then. You did point out that you do not expect this to be a long-term reversal in trend. This could just be a bounce, and now we've sold off from the day's high point quite a bit. 35 points now remaining on the higher side, 23,488. So we've again slipped below 23,500, below the opening levels as well. So that's where the markets are shaping up. But, in this recent 5-6 weeks of a downtrend, have you identified any key opportunities that investors can start nibbling into now?
Yes, see, so in these kind of markets, there are some less risky opportunities which are available. The long term trends, which the stocks which are fundamentally very strong. So there are some pockets which I see, like Godrej consumer price. I see the current buying position can be taken at current market price for a target of 1250 to 1300 with a SL of 1160. So Godrej Consumer is a stock which should be on the investor radar for the short-term gains. Then Unichem Lab is another buying opportunity which I see at the level of 880 for the target of 950 and 1000, and a small stop loss of 850 should be put, because the market is reversing, so that might trigger some losses. But yes, overall, if you would see for the longer term, for the investment horizon, these stocks looks good.
Right. Okay. I want to also understand from you, Mr. Nadeem, how are you looking at some of the large cap opportunities? Stocks like Reliance Industries, for instance, they've not been any kind of a return this year in 2024 for a marquee player like Reliance Industries. But after the consolidation, after the bonus split that's taken place, where do you see a bottom being formed there? And from where do you see a reversal in trend for a stock like Reliance Industries? By when should one start to garner attention on this one?
So yes, Reliance this year has not given so much return, and we have seen it is subdued. The It's basically, I think 11,050 is the level which traders and investors should look out for Reliance stock for bottoming out. And basically, I think over the longer term, it would return to its growth trajectory, and we would see good return of around 12 to 15% in Reliance stock as well. So at the lower levels around 1150, 1160, the accumulation should be done in this stock, and it would in the short term also it would give return of 15 to 20%. And basically what is happening is since the businesses are hived out, the market is looking for clarity on the core fundamental side of the business. So basically I think after this quarter ends we would get more clarity, and the bullishness should come in the stock.
Okay. Let's now also discuss some of the other pockets like mid and small caps is something that I wanted to also understand from you. There's been a sharper fall in the mid and the small caps in this recent correction. The benchmarks are down over 10%. There's an over 11% cut on both the mid and the small caps. There was a lot of talk about froth in this space before the correction started. So this was probably being seen as much needed. But is enough of the froth already out, or much more correction really needs to take place even now from these levels?
I think there are more gaps which are to be filled, and we might see more pain in mid cap and small cap going forward. So basically, what was happening was previously, whatever stock you pick, it used to give return, and everyone went crazy with the kind of rally we were seeing in the mid cap and small cap sector. But now, it should be more sector and the stock specific rally which we would be seeing in the small cap and mid cap, and it would majorly would be driven by the consumer product side, the IT side. At all we get clarity, if at all we get clarity on the tariff side, what US government is putting, what changes they are putting in the tariff policy. After that, I see the pain getting out from this sector, and we might see a bounce back. But yes, in the near term, if you would ask for next 1 and 2 months, there is more pain in this sector, and investors should be closely watching this sector for, and should not get swayed by some immediate gains.
Okay, got it. Also, to understand from you, where exactly would you still not be comfortable? You know, just to understand that despite the correction that is, that valuations still are pretty expensive, or things need to be on a more corrective zone before one really looks at them, because it would be catching like a falling knife. Maybe pockets like railways, defense, PSUs, these have been battered left, right and center in this correction. Are you feeling anywhere the discomfort still persist?
See, I think another 4 to 5% decline should be can be expected in the market, and that would be a zone where we can think of buying. Also, the buying should be done in the frontline stocks and the major the thrust area of government, instead of buying on the whole basket. So that should be the approach for some time now, because I think the kind of rallies we have seen, there are very many gaps which are to be filled in the market, and the market would come and fill those gaps. So yes, to answer your question, 4 to 5% from here, we might see more downfall, and that should be a base point for adding some portfolios in the some stocks in the portfolio.
Okay, understood that. Now, when we talk about some of the other key pockets, I wanted to also get a sense on the overall two large pockets. One is the banking space. Now, there was a large consensus building in from the beginning of this year that slowly and gradually it will be the financials which will start to come back. Now, what we've seen is that the FIIs have sold off. It's been an exodus of sorts in the last 5 to 6 weeks odd, and it's the FIIs that are heavily invested in the banking and the financial space as well. Do you think the banking and the financial space will start to outperform the moment FIIs return? Is this a good enough time to look at some of these stocks within this basket?
Yes, the banking would be the first, the banking sector would be the first to in this turnaround, like the market again reversal strategy. So there is one stock in my radar, ICICI Bank, I think is buy above 1265 level. We can see target of 1350 and 1500 going forward, and investors can keep a small stop loss of 1230 if they enter in this trade. So yes, there are some banking pockets which looks good, and the frontline stocks, ICICI, Axis Bank are there, on which it should be on the investor radar. And above 1265, ICICI looks good for a target of 1315 and 1400.
Okay, understood that. How about the PSU banks? Where would you keep them when we compare it with the large private sector banks? Do you think now the time has come that slowly and gradually this space will also start to recover? It's seen a correction that has happened in the recent times. Are you comfortable with some of the top band or even the second rung PSU banks?
Yes, the kind of rally which we have seen in the PSU bank, and then the kind of drop which we have seen now again, the base has been prepared for another rally in PSU bank, and all the banks are well capitalized, and the kind of credit infrastructure which has been built by the government overall, I think yes, they should return to the path of bullishness, and overall, the PSU banking sector can give good gains in the long term, given the current base which has been created. So another 2-3% fall, and then you can start accumulating some good frontline PSU bank stocks like UCO Bank, IOB, so Bank of India. So these banks, we can see bullishness, but all these comes into picture for a short to long term, not an instant gain can be seen.
Okay, understood. Now, Mr. Nadeem, I'll also just, we are 7 minutes away from the day's close right now. Also, just wanted to get a sense from the retail investor's perspective for somebody who is coming afresh in this market after the recent correction. Do you think it is the right time that they are entering into the market? A lot of cool off has already taken place. Those who were waiting on the sidelines thinking that the markets are too high and you need to wait. Secondly, what is the key strategy that you would advise a fresh investor to deploy in this current market, the way they form their portfolio at this point in time?
Great. So what I think is, given the current market structure and the kind of hammering we have seen in the market, I think another 3-4-5% drop in the market, and the investors who are entering fresh should be ready with cash, but that cash should be deployed in stages. Like in after the market test to 23,200 level for some time, and we see reversal and a base forming there. So 30-35% of cash should be deployed during that rally, and then the overall in next 2 to 3 months, the overall deployment of cash should be done in the portfolio. Not all the cash should be deployed at a time, because there are many factors which are to be seen in the next market rally, like how the interest rate is positioning is there, the US side, the Indian side, and then again the tariffs which the market might make market nervous if tariffs are there from the Trump regime. So the earning part which started itself, that we would be seeing the positive second quarter of first or second quarter of 2025. So this time should be utilized for searching some good pockets, and the cash should be deployed in stages. So if we see a bottom forming out at 23,200 level, so 30% of cash should be deployed, and then remaining in stages going forward.
Where would you place the precious metals, gold and silver, and probably any other asset classes in the diversified portfolio right now? We've seen a stellar rally, the way gold and silver have outperformed equities. A lot of investors are now taking keen interest in these commodities and precious metals also as a part of their core portfolio now. How would you advise them?
Yeah, so given the current market conditions which we are seeing, definitely the precious metal should be part of portfolio as a part of hedging, and also for looking for gains as well. So gold, we have seen that it has recently made low of $2,580 and a high of $2,800. So I think at current level also the gold should be buy, and we might see level of 2,700, 2,720 dollars in the short term, and also the dollar impact would mean a higher prices in Indian rupee terms as well. So that way, yes, it should be the part of your portfolio. So 20% allocation can be done for towards precious metal as well in your portfolio.
Okay, got that. Well, Mr. Nadeem, it was great to talk to you to seek all those insights on the markets and the way you've guided all our viewers. Appreciate that. Thank you so much for being with us on this special edition. What we'll do, viewers, is we'll start to wrap up the markets now, and it's just 3 minutes before we shut shop, and we have slipped below that 23,500 mark. We're just holding up to that 34 points of gains right there. So, if you began by watching us live, that's the thumb that we had right there for you. Bulls return, but for how long? That's exactly what we were questioning, and you've got the answer just towards the end of the session, as well as to how profits have been taken off swiftly after that whole days of a hovering around 23,700 odd mark as well. The Nifty Bank is looking in a better shape than the Nifty. Even yesterday it was up about 0.2% right now, higher in trade for the Nifty Bank. That's almost 100 points up. The sectors that are still holding up are the media stocks. That's largely skewed because of the Z Entertainment stock right there. It was up and about. Let me just quickly see if that's the one that's leading. Yes, 6.5% higher. So that's pulled up the index. Real estate sector, that's up by 1.4%. You have autos that are driving faster, 1.2% higher. Consumer durables, pharma, IT, even the broader markets are holding up about 0.6%. What has really slipped? Metals, the one that outshone in the markets yesterday, profits being taken off, 1% down, PSU banks down 0.9%, oil and gas also down 0.5%, and the infra stocks are now down by about 0.4% as well. On the Nifty, absolutely flattish trade. You have M&M as the top mover, 3.2% higher, Tech Mahindra, HDFC Bank, Trent and Eicher Motors. So some of those auto names definitely doing better than the others right now. On the downside, SBI Life has further lost ground. It's now 3% down in trade. Hindalco, Reliance Industries, remember this was contributing to the gains in the morning, one of the top movers when I had started off the market today show in the morning trade. But when we look at now, the profits have been swiftly taken off, 1.8% lower for Reliance Industries. It now is contributing towards the losses on the Nifty as well. HDFC Life and Tata Consumer Products are some of the other laggards right now. Remember, the PSE index was also up by about 1.5%. Half of those gains have been retraced. Now you see IRFC, which is holding up 5% higher. REC, Oil India, NHPC, PFC and BHEL as the top 5-6 movers on the PSE index. FNO, you have Deepak Nitrite as the top mover, 4.8% higher. You have Granules, Dalmia Bharat and even Divi's Laboratories as those that are outperforming. But on the lower side, on the FNO space, you have Max Financial Services that slipped about 4%, SBI Life, Jindal Steel and Power, and even Vodafone and Hindalco as the ones that are dragging on the street. So there you have it. The screen has frozen, although in green, 23,472 right now. Markets will be shut for tomorrow on account of Maharashtra elections. We come back on Thursday and let's see how that also really pans out. We'll have 2 days of trade before we move on to the next week, which will be the full week of trade then going forward from here. Many thanks for tuning in on Business Today. I hope you've got enough and more insights from the top market experts that we get for you on the channel. Do stay tuned. There's a lot more lined up even beyond this.
Delhi NCR is gasping for air. On Tuesday, the national capital's AQI crossed alarming levels. Out of